In today's training and educational video, we're going to be talking about a trillion here, a trillion there, and what it means for the stock market. We're also going to be looking at the Fed's balance sheet and what that actually means for the stock market and what's to come as well too. Also, we're going to be covering the velocity of money and what that means right now and what that means for inflation, and also what sectors are likely to do best based on what's likely to happen moving forward. Also, the retirement confidence declines and as the market surges. We're going to talk more about that. What's likely to happen moving forward with that as well too. Also, we're going to talk about how Twitter, Facebook, and YouTube are still banning a whole bunch of stuff. And also, we're going to talk about how they actually want to take away the $600 employment benefits with a 70% wage. That is really, really bad right now. And also, Donald Trump likes to say we're making tremendous progress. One look at this chart says a different story. Let's get straight into it. Don't place a trade based on what you're seeing in this video because there is no guarantees of making a profit in the market. It takes you a long time to become a good trader. So this video here is just to educate you to become a much better trader. Alrighty, hey traders, John Howell here. And let's get straight into today's video. The very first article that I want to cover here is this one here. It says a trillion here and a trillion there. What that means for the stock market leadership. Now, what they're talking about right now in the stock market leadership for this here is it's talking about how the leadership right now is the tech stocks. So the tech stocks right now are the leaders of what's going on right now. And as you know, they've been just absolutely just crazy. They're still in a bubble, and we never know when that bubble's going to end. Nasdaq had a bit of a down day today, but we never know when the Nasdaq is going to end. But they just that's what they talked about here, and they're saying that there could be a bit of a change in leadership. And one thing that they talked about here was the Fed's balance sheet explodes. Okay, just absolutely, or the deposits at the Federal Reserve explodes. And you can see what's going on through here. Now, what's happening is that the government is going to continue to buy up everything possible. And this actually was actually a bit of a warning sign last year, because last year when they started buying up all like billions of dollars of auto loans, for the auto industry. And you probably heard that, right? Like late last year, I think it was, or maybe early this year, they started printing money to buy up these loans. And it was really, really, really interesting to see that that's what was happening. And then all this is happening right now. So the government is going to do whatever it takes to keep the stock market up, especially Donald Trump, right? You know, Donald Trump is like stock market, stock market, stock market. Yeah, when he was being elected, he was like stock market bubble. And so what's happening right now is that the whole U.S. the whole Federal Reserve right now is going to keep trying to print as much money as possible to try to keep everything afloat. Now, what's happening is that they're going to keep printing money as much as possible, and they need to. And the reason why they need to is because this chart right here, which is the velocity of money, which simply means how much it's actually circulating, how much the money or the currency is actually circulating through the whole, through the system. Now, the interesting thing about this, guys, is that since we've actually had the reason why they've had to keep printing a lot more money is because the velocity of money is dropping down. If the velocity of money was picking up, they wouldn't have to worry about that. But since the velocity of money has been dropping down, they've had to keep printing more and more money to keep up with that. Now, what's going to happen here real soon is this velocity of money will change trend. We're going to go down, and with all this money in the system, then this velocity of money will start to pick up. We're going to see a nice rise. And nice rise in the velocity of money, the circulation of money or the currency in the system. And when the circulation, the velocity of money starts to pick up, and then with all the currency in the system, that's when we're going to start to see massive inflation. We're already starting to see inflation right now when it comes to like food and so on and so forth. But we haven't seen nothing yet, or we're actually starting to see inflation across a lot of sectors. So right now we're seeing a massive what we're likely to see over the next couple of years or more is this start to pick up. We're probably likely to start to see over the next probably 10 years. Over the next 10 years, we're likely to see this pick up, and that's going to cause inflation. Now, when it comes to inflation, what are the sectors that are likely to do best? And so they talked about here, let me just bring back here. They talked about in this one here and what that means for the stock market leadership when it comes to that. And so right now, the tech companies right now are the leaders of the whole, like only 5 stocks are leading the whole stock market, really. Everything else is doo-doo. But, the tech stocks and everything. So what I truly believe is going to happen is that the tech stocks are going to come back into a bit of an equilibrium. But meaning that they're probably going to get some pullback soon. But what I see for this chart here is over the next 5 years or more, the leadership is probably going to be the mining stocks. The mining stocks right now, I see like GDXJ, GDX, silver, gold, even the SIL and SILJ, especially over the next couple of years. I see those sectors as we continue to see inflation pick up even more. Because what happens is this, is that when they, let's go back to this chart here, when they print a lot of money, and it goes into the system, initially it doesn't cause inflation. Okay, initially it doesn't cause inflation because it's just getting into the system, and it's just circulating through there. But then what happens is over a few year period, is that then it starts to cause inflation, and then as that inflation picks up, guess what? Materials and like even materials and building cost and even like things like the mining sector, right? Everything starts to go up in price. So guess what that does to mining stocks, right? It causes their prices to go up, which is basically the bottom line for them. And so therefore, I truly believe, guys, leave a comment below, let me know what you think, that I truly believe by looking at this chart here and looking at the inflation that's likely to happen moving forward, that I truly believe that, yes, we're getting a massive boom in the tech stocks right now. But I truly believe that they're going to slow down a little bit. And then over the next, say, couple of years, I believe it's already started. The mining stocks like GDX and GDXJ, those sort of sectors are telling me that we are getting ready, especially the gold junior stocks. The junior stocks, to me, are just starting to break out now. And I believe we're getting ready for a massive, massive move in the mining stocks. And also silver, I still believe is going to make a massive move. I see a bit of a short-term pullback in silver, but overall, I see massive moves still coming. Gold has already made a really big move. Silver's likely to catch up, and then the mining stocks are likely to catch up, and then this inflation that's going to keep slowly crawling its way into what's going on in the economy. They're the sectors. So the sectors that are likely to do best out of the inflation that is likely to happen, this big INF, the big inflate. There we go. The sectors that are likely to do the best out of this here are the mining. I truly believe, and also things like if you talk about like a storehold of wealth, what are the sectors that are likely to do well overall? The mining, because of inflation, and mining right now are probably going to take over at mining. Everything goes in cycles, right? So what actually happened is gold, from 2011. So as I was saying before, right, that everything goes in cycles. So as 2011 to 2011 top up here, which was gold, and then we went through a bit of a drop as the stock market was rising. Stock market's doing really, really well. Then suddenly what happens is we go through a bit of a quiet period through here on gold. And as the stock market's rising, no one wants anything to do with gold. Everything's quiet with gold. And now gold for the last 12 months has gone through a massive bull run. So gold right now is starting to take over as the S&P and the Dow are starting to struggle. And the tech stocks are getting very top heavy right now. That we're starting to see a change in what people are focusing on and what people are seeing through here. So we're starting to go through a different cycle right now when it comes to this. For the last 10 years, it's been stock market. For the next 10 years, I truly believe it's going to be mining stocks. And of course, also not only mining stocks, but also what's likely to do really well out of this, and you could call this a storehold of wealth. Gold, obviously, silver, mining stocks, and also, food outlets. the different outlets that mainly focus on food, as inflation goes up, guess what happens? Their prices go up as well too. Like, I guarantee you right now here in Australia, the prices, some of these prices have doubled. Even my mum says, right, Dow, I just went and bought this yogurt, a few months ago. It was $2. Now it's $4. And moving over to this article here, based on the retirement confidence decline despite the surge in the stock market. Now, this is something that I was talking about. I've talked about a few times, and let me just bring this chart up here, and I want to share this chart with you. The bottom line here, the blue line is the interest rate, and the red line is basically the government printing money. Now, as you can see, that when the government prints money through here, and then we go through a bit of where the government starts to restructure, default, all that sort of stuff. And therefore, it's going to put a pressure on different government-assisted, like healthcare, pensions, and all that sort of stuff. And this is where it's dangerous for say 10-year period afterwards. So right now, as we can see right now, for the next 10 years, maybe we might even go up a little bit more. But then for the next, say, 10 years from now through to say probably 2030. As more and more baby boomers need to retire or are trying to retire, they're going to require pensions. And if the government right now is even have a hard time just paying back their interest, what do you think that's going to happen with everything that's going on? And now less people are working. More than 50, I think it's around 50% of Americans are not working. So this cannot keep up. The government cannot keep this up. And so that's why it's going to be, this is really bad. Really, really, really bad. And so we can see so as they start to default on their debt over the next 2, 4, 5 years, it's going to slowly increase. And as more and more baby boomers are starting to go up, they're going to realize that they're going to have to go back to work. And that's what they're starting to see with this article through here. You can see that it says 37% are not confident that they can save enough to retire. 32% are confident that they can save enough, and 48%, however, don't think their retirement savings will reach $1 million. So as you can see, it says here, according to the July 2020 SimplyWise Retirement Confidence Index, 62% of Americans are more concerned about retirement today than they were feeling about it a year ago. Such is up from 56% in May 2020 index. The survey also found that 70% of people in their 50s who are nearest to retirement also more concerned about retirement today. Now, the one big thing that's actually hurting the retirement is this chart right here. As you can see, that 65 over employment as a percentage of population. You can see how this was going up and up and up. So 65 over employment as a percentage of probably as you can see, more and more people 65 in years and over, they were still working. There is even the pension wasn't even enough to live on. So they were still having to force to work. And then suddenly look what happened. They got slammed. So not only is now they got slammed, so now they require more assistance from the government, but now the government's been sort of pressure as well too. And this chart right here, the red line is the change in real receipts. So the change in real receipts is basically, what the government's actually getting as in tax income. And then you can see the percentage in change real expenditure. So this is according to, baby boomers, and I think a lot of people actually as well too. But not only baby boomers. Baby boomers are trying less, and now there's actually a lot more. Now there's actually a lot more expenditure, more serviceability from the actual government. This is really, really, really bad. And it also says that pension crisis loom large. Currently, 75.4% baby boomers in America, about 26% of US population have reached or will reach retirement age between 2011 and 2030. More pressure. So as the government's starting to default and restructure their debt, more pensions, more babies. Many of them are in the public employees. In 2015 study of a public sector organization, nearly 50% of responding organizations stated that they could lose 20% or more of their employees to retirement over the next 5 years. Again, more pressure on the government. Local governments are particularly vulnerable at 37% here. But this is the big thing. This is the big here. That was 5 years ago, and one economic shutdown today. That the roughly 6 trillion in unfunding pensions have now come home to roast. 6 trillion. Can you imagine? So that's right. This is really, really bad for baby boomers out there. Now, for you young guys out there that are watching this video, maybe you're in your 20s, maybe you're in your 30s, like me. I'm in my 30s. I will always continue to work my ass off to make sure I have my pension plan. So by the time I'm 65, that I could take care of myself and not have to worry about that. So I really, really, really encourage you guys that if you're, even if, you know, especially if you're 40 plus and you're not doing anything to start to really accumulate some serious wealth behind you and having that long-term plan, I think it's time to start. Also, Twitter, Facebook, and YouTube are taking down this hydroxychloroquine video. I hope they don't take down this video. And now Donald Trump Jr. can't tweet for 12 hours. That's especially YouTube. YouTube are taking down a lot of videos right now, and it's getting really, really, really bad out there. So guys, let me know what you think about the whole YouTube thing and so on and so forth. I know there's been a lot of other people out there, like London Real was also in the same situation as well too. You know, it's really interesting because I'm pretty sure that Donald Trump started coming out and saying, you know what, this hydroxychloroquine sulfate, I'm pretty sure even Donald Trump started taking that. And this is where it gets really bad. Republicans want to replace extra 600 employment benefits with 70% of wages. 70%. So people that are unemployed right now, not only did they get probably a 50% bump in pay by sitting on their bums and smoking weed, oh, don't do nothing, stay home and have all this money. Not only do they do that, but now they're going to completely reverse to not even give them what they're probably earning at a job, but now 70% of their wage. Oh my goodness. Like there's probably going to be more riots in the street that this happens. This is going to cause more just really, really, really bad. You know, people, they're not going to be paying their mortgages. So it's bank defaults, or should I say mortgage defaults, foreclosures, and so much more. The debt is going to absolutely just explode because now they're going to, guess what? A lot of people is going to start to go to credit cards and all that sort of stuff. Bankruptcies are going to be massive when this happens. And also, lastly, what I want to share with you today is Donald Trump likes to say we're making tremendous progress. One look at this chart tells a different story. As you know, Donald Trump is like, oh, look at this, look at this, look at this. And what is that chart? This is the chart here. It's from Evictus from Twitter. And look at this here. This is pretty cool. So down the bottom here, down the bottom in March, you know, Donald Trump says, making tremendous progress, incredible progress. And then suddenly we have 100 dead. So through here we have 100 dead. Then we have 60,000 dead. Great progress, tremendous progress, very good progress, great progress. 90,000 deaths, oh, a lot of progress. 120,000 dead, a lot of progress. Right now, exciting progress. Donald Trump is the biggest, Paul Tudor Jones said this as well too. Donald Trump is the greatest salesman of all time when it comes to the US stock market. So anyway, guys, that's my little update for you today, guys. Leave a comment below, let me know what you think about what I said about what's coming. Do you agree with me when it comes to the mining sector, silver, gold, and probably moving more away from the tech bubble that we're seeing right now? What do you think about the retirement? Do you think that they're going to be able to keep up with that, or do you think the pensions are going to be under pressure as well too? And also leave a comment below and let me know what you think about the good old Trumpy, about him being the biggest cheerleader out there. And last but not least, guys, click on that very first link in the description. I've got a whole bunch of free training plus a free course to give you to help you with your trading. Speak to you soon, guys.